But just because you're later in life, okay, it might be difficult if you start later in life, but that shouldn't hold you back from at least trying and making that attempt, right? You want to be key with your smart investments, right? You don't want to throw things that are high risk, right? You're going to want to make sure you minimize your fees that are associated. You're going to want to choose a brokerage firm, right? That doesn't have these outlandish stock transactions that's associated, or these maintenance fees that's associated. You're going to want to reinvest your earnings. And then look, if you're older, let's say you have a traditional IRA or a rollover IRA, your 401k you've rolled over to your IRA. There might be a point where you look at converting that rollover to a Roth.
Right.
Okay. I remember back in, 2008, when the stock market pulled back pretty heavily, right? That was a key time to actually, when accounts were lower, were to actually make that conversion. So you knew it was going to go back on an uptick. That would have been the best time to actually do that right there.
Yeah. There's other things. Your employer may have a Roth version of the 401k that you can contribute to. And so that's another way to get really, because now I can contribute up to $20,000 to my Roth 401k rather than my traditional, right? We're big proponents of pushing on Roth because it's tax-free money, right?
Tax-free money.
So we pay our taxes now, and then when we get ready to pull it out in retirement, that's tax-free money, all the growth and everything else. And so one of our big issues when people get, that 55-ish, I'm looking at retirement, we start looking at how do we start shifting money over into the tax-free buckets, right? And this is one you talked about doing the rollover. It's under 72T under the IRS code. And what it allows you to do is start taking gradual payments without paying that 10% penalty and rolling it directly into a Roth IRA. Now, you do have to pay taxes.
You do?
You do. And that's where you need to work with a professional so we keep you from going up into a bunch of big tax brackets and paying more than you need to. But we can set up a schedule where by the time you're 65, even 70, if that's how long you want to wait, we've bled that traditional IRA out, and now it's all sitting in Roth, and it's growing tax-free.
That's right. That's right. So, getting back to it, you're going to want to increase your income. As your income increases, you're going to want to increase your contribution, I should say. You want to stay disciplined, Rick. Every year, guys, it's consistency over and over and over.